GM everyone. Welcome. Oh, that is fucking fire. I'm going to have to remember to steal that and use it on Purple Belt. The Purple Belt stream. I just stole this off Hamza. That is fucking G. That'd be great for a Purple Path stream, which I need to get one in as well. There's so much happening. Tomorrow I've got Ayush. Monday I've got Mentorship Monday. Probably for you Purple Belts, probably Tuesday we'll do the Purple Path. I always like to do it in the first week. Vimeo link is here. Live questions. For anyone asking, wondering. GM. Oh, this is fire too. I need to remember to go back through and steal these. The memes are fire. It's funny, as soon as I saw this, I thought it was Felfiat. GM Cram. Bake the Snake got his blue belt. Congratulations. Today's agenda, Mr. Robot. You're going to love it. Day trading. Alright, so a couple things. No, I've got a drink here. But let me go. Yeah, give me 30 seconds and I'll be back. GM. All right. So, the drink of the day is still water with electrolytes, yes. That's a banger. You put in a poo into any photo and it makes it good. So, today, new feature, new series, weekend workshops. These are going to be different, and they're going to cover different topics. They're going to cover a range of things, from trading styles to research, scenario analysis, etc. But there's a difference, right? the recording is only available until tomorrow, 24 hours. The whole theme of this is weekend work. So if you're not here on the weekend, you don't benefit from the work. It's a little bit like, I think Adam does this with his daily videos, right? Doesn't he only leave his up for one day? I prefer to leave most of my other stuff up for longer. But for these weekend workshops, they're weekend only. I would make it live only, but that's not fair because I know some people can't get on right at the time. So the compromise, it's live and the recording will be up until Sunday night and then we will be gone. Mr. TP, I don't know whether to sell my spot into fiat. I'm actually flapping about it. So you should watch monthly preview. You should watch my monthly preview, which I'll post after this. The thing about selling, guys, you can always buy back in. I know it's a simple concept, but if you let go of the idea of your entry or your exit. So like I said this, I just recorded monthly preview before this. And I just said like really simple. I used one example. And it was just this 50 EMA plus the monthly open. So the way I look at it is this. If there's no reason to panic, right? If there's no recession and all this kind of stuff, what's Bitcoin going to do? Bitcoin is going to go, and I sold at 63. It was 62.8, 63, whatever. Sold there, right? If Bitcoin is going to be all good, it's going to go like that, right? It's going to reclaim that 50, and it's going to, most importantly, reclaim the monthly open. The monthly open is at 65k. So I can just buy back in at 65. I sold at 63. I can buy back in 4% higher. That does not concern me at all because the risk at that 63, the risk is potentially, could be 20%, could be back to the lows. If it could really be deep. You know, I've lived long enough to see big crashes in Bitcoin. So don't stress about buying back in higher. Now, of course, you need a plan. I'll obviously tell you guys exactly when I'll buy back in. And I'm not saying that I'm going to be correct either. But that's how I'm playing it. DK, why didn't you hedge but sold? Because there's also a non-zero chance that it's over, right? I don't put the chance of the bull market being over at 0. I still put it way less than 50%. But I only hedge when I think it's a pullback, generally. And for anyone who doesn't know what hedging is, hedging just means shorting. So instead of, let's say you had 5 Bitcoin, instead of selling the 5 Bitcoin, you just short 5 Bitcoin. So if it goes down, you make money on the short. If it goes up, your holdings go up. But if it's liquid enough and you can sell, which is very easy to do on Bitcoin spot these days, and most importantly, I think one of the reasons as well, DK, why I didn't hedge is because I wasn't holding a bunch of coins. If I was holding Bitcoin and a Cash and a bit of Ethereum and some Solana and maybe like a meme Pepe, if I had 5 different things and they were all in wallets over this, I probably would have hedged, yeah. Because getting them all, loading them all into exchange, trying to sell them, slippage, liquidity constraint, all this, it's just, hedging would be easier in that sense. But for me, it was a simple decision. And you have to go in with the idea, I am 100% happy and hoping to be wrong. I hope I buy back higher. I hope I'm buying back at 65. But the risk is very much there. Simone, what if I record the video, don't want to do it? Well, that doesn't matter to me, right? The recording is only available for 2 days because I only want to reward people who are grinding at the weekends. If you record the video, it means you're on at the weekend. So what's the difference? But you should, it's interesting to see. It'll be good to see from you guys in a few weeks because you usually get content from me that is up for months and you can go back anything you want. Be interesting to see how you like the format where it's not there after a day. It probably makes you guys pay more attention and take notes, right? Because you know it's going to disappear. Take screenshots and whatever. Yeah. But also there'll be stuff for, I think probably right away. I think right away purple belts, you will get access to an archive. And when I launch brown belt, same thing. So like the higher belt levels will get access to these previous recordings. So it's a chance for you to, another reason to be a purple belt, another reason to keep ramping up. Nick, what do you say about the yearly candles? Looks good. Yeah. I see all of these. I don't see a lot of value in them because for me, I'm a shorter term trader. So like this looks great, but what do you do? How do you action this? Like, by the time this yearly candle would go, so it looks great now. By the time it went red, we'd be where? Like 38k, 40k, because that's where the yearly open was. So I don't find it actionable. For me, if you're somebody who trades over 10-year time frame, sure. Okay, so I won't take any more questions. I have to get into the actual lesson part of this. Britain's fattest woman ate a fridge and died. GM. Should I trade crypto only during New York or during all my free time? I'll cover that on this stream. This stream will touch on that. Soul Taker, when brown belt? September. This month, I've still got a couple of purple belt lessons I want to get out. And then also, brown belt will launch probably at the start of September. At least that's the tentative plan so far. Thoughts on Warren Buffett selling 50% of his Apple holdings? Did he? Did he actually though? There's so much misinformation. Oh, it's on CNBC. Warren Buffett's Berkshire Hathaway sold nearly half its stake in Apple. Interesting. Yeah. Yeah. I mean, it's funny, right? So, pattern of selling Buffett in the second quarter, unloaded 75 billion in equities, raising the conglomerate's cash fortress to a record 277. Whatever you want to say about Buffett, you can't say he's not a good investor. And why would Berkshire Hathaway be hoarding cash? This is a quote. Why have they attributed this to a bunch of different people? Oh, sorry, no, not Blood in the Streets. It's this one. Sorry, I thought Blood in the Streets was Warren Buffett. It's be greedy when others are fearful. Here, I know it's kind of small. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. Right? Same sentiment as the Blood in the Streets. So, they're stacking up on cash. Well, what's cash used for? Cash is used to buy the blood. So, I guess he thinks it's going down. Can you do an analysis of Airbus versus Boeing? No, I'm not a stock trader. Professor Ayush in the stocks campus would be the G for that. CryptoFi, today is not about asking for coins. Today is a workshop. I'm going to show you guys about trading. Day trading. All right. So, look, I think any questions you have about the market, monthly preview, which I recorded before this, is going to be uploaded after this. Monthly preview will answer pretty much all of that about where I think we're at. Mr. Robot, just a thought on the weekend work and why it's essential. It's the only time you can properly, without distraction, backtest. Exactly. When do your muscles grow? Not when they're in the gym. When you're in, even if you're not a day trader, Monday to Friday, the market's so active that you're always watching it. There's always something going on. You could be in a trade. If you're in a swing trade, you're watching it closely. If you're looking for setups, weekends give you that chance to, generally. Now, sometimes you can have a weekend like this, which is volatile, but most weekends give you a chance to step back and review. Exactly. So, the beverage today is water with electrolytes. Just electrolyte powder. sodium, potassium, all that good stuff. Now, a couple of things. I'm going to go through a rundown of day trading, how it differs and how it is similar to other styles of trading, and particularly focusing on how it differs. And then we'll see if we have time for maybe some questions. Do I ever do cuts and bulks? Sort of, but not. I don't really bodybuild with any great intention. Focus more on strength, and mobility is big for me at the moment. Getting old. So, I am not going to open live questions because there may not be questions for this. Or should I open it? I'm kind of toying with the idea of whether to open it. All right. I'm going to say this before I do it. So everyone, please listen. The live questions you ask, which I'm going to open now, are only related to my workshop. So when I start this mini lesson, only ask me a question in here if it's related to what I am talking about, to day trading. Yeah? And I'll answer a few of them at the end. I probably, if there's 20 of them, I probably won't get to them all, but I'll answer a few of them. And of course, if you ask me about anything other than the live questions, I will, of course, ignore you. Only live questions related to the stream, to the lesson. All right. Clear as day. Let's fucking go. So, day trading. What is it? What's it all about? What's the difference? How do we do it? Day trading. So first of all, I mean, for the really, really basic, day trading as a definition is opening and closing a trade within the same day. Right? It's also known as intraday. Open and close a trade same day. Also called intraday. Now, there's different approaches to day trading. This is probably where there's most differentiation between day trading and other styles. As I see, why is it telling me? I just want to make sure that is connection okay? Screen is okay. Seems like it is. Maybe it's just TradingView that's going slow. Just want to double check. Connection fine. I'm going to just double check my Wi-Fi. Seems to be all right. It's all good? All right, cool. Now, day trading, open and close trade same day, also called intraday, and also encompasses scalping. So scalping is just it is important to differentiate scalping from day trading, because you could hold a day trade for 12 hours throughout a day, right? You could hold it from 12 a.m. to 12 midday, 12 p.m. That would never be a scalp. A scalp would never be that duration. A scalp is when you're trying to catch generally a fast momentum move. It doesn't have to be a certain number of minutes, but you're trying to capture a specific momentum move. If you're trading, let's say, if you're trading an economic data release or you're trading breaking news, that generally would fall into the realm of scalping. But for the purposes of this, you would class that the same. Day trading, scalping, same thing. It all falls under the, do you open and close the trade on the same day? Right, that's first of all. Next thing that's important to note is how much time you have available. Your time availability. You can't day trade if you can't watch the trade. It's very important. You can't day trade if you can't watch the trade. This is not something where you can put on a trade and then leave it. You have to be able to watch the whole trade. Now, does that mean that there's not specific, instances where you know that your average trade is going to be 12 hours long and you've got your stops in, you've got your take profit set, and you can leave the trade for a little bit? Sure. But the idea is that you must be available to action anything. So I'll use an example of me. Whenever I'm in a day trade, do I always have the screen open, always watching every candlestick for a 10-hour trade? No. Quite often I'll spend an hour or 2 hours getting a setup, getting into a day trade, and then I'll watch the first hour, 30 minutes or an hour of it. I'll see how it starts to develop. And once it's settled in and I think it's moving in my direction or whatever, I can go and record videos, do other work, answer questions, go to the gym, whatever. That's fine if it's part of your plan. But you must be able to immediately action anything that changes. Right? So you can't be going to a 9-to-5 job. You can't open a trade at 7 in the morning and then go to a 9-to-5 job where you're not able to get onto the laptop or get into the market. Right? You have to be able to be there. So there's a difference between watching every single candle and being available to do that. That's important. So typically when I'm in a day trade and, let's say I enter a trade and we're on let's say we're on a 15-minute chart, right? And you're in a 15-minute chart and the trade is going from this breakdown here. Let's say you short after that breakdown and you enter there and your stop loss goes there, and then it goes in your favor almost immediately and you're letting it play out, and then it goes down to here, right? And you want to go and do something else, or you've got other work to do, or do you need to watch every single candlestick here while it's at that level? No. I could happily close that screen, open up another screen, do some work, while at the same time having an alert set. So for example, on this one, this trade wouldn't be at risk of needing to be closed until it would break back above this previous swing high before the last move down. So what I would do is I would set an alert. Boom, alert set. Then if that alert fires, that's my trigger to get back on the chart and get active. You understand? But that requires that you're actually available to be there to do that. There's no point setting the alert if you're at work and you can't take the trade. Also, here's another thing that gets really overlooked. Just because you can do something doesn't mean you should. Super important. Super important. Can you open trades and then go off to your work in a job? Yeah. Can you open a trade and then go off to uni for the day? Yeah. Should you? No. Not if it's a short-term trade. Because you all know this. If you've ever opened a trade, you're going to be so distracted from everything else you're doing. You're going to be thinking, where's my position? Is it in a profit? Is it in a loss? How's the market looking? You're trying to sneak looks at your phone when you're in class. You're trying to sneak a look at your phone when you're in work, which could lead to you getting in trouble, right? Or could lead to you, worse than that, can lead to you making bad decisions. When you're not sat at your desk with the market in front of you and all your focus on the market, if you're sitting in a lecture or you're sitting at work and you see that the market suddenly starts moving, you're more likely to make a bad emotional decision because you're not centered, you're not fully focused, you don't have all the information available, and you're just looking at your phone and you're trying to trade in and out. It might work once. It might be okay sometimes. Over time, it's a recipe for disaster. So that's important. If you're somebody who has only 2 hours a day free, you shouldn't day trade. When you have more time available in the future, you absolutely can. But if you've only got 2 hours from 7 a.m. to 9 a.m. before you go to work, look, people ask me this all the time, like, but what if I have, like, can't I just trade from 7 to 9? And I look and it's like, no, because you don't know when your positions are going to set up. So let's go back here and look at the start of this day, right? 2 hours is nothing. There's midnight and there's 2 a.m. So just use this 2 hour period as an example, right? So there's your 2 hour period. Now, what's your trigger for getting into a trade? And what's your trigger for getting out of a trade? Most of the time, what you'll find is that the first 30 or 60 minutes of your period of waiting, nothing much happens. And maybe once it breaks below there, then you get a trigger, right? Now you've got a reason to enter, and then you enter a short, and you got your stop loss above there. And then what? Now you're against the clock. You have to be at your job. You have to be at work at that time. You've got somewhere else to go. You've got another responsibility. You've somewhere to be. And then you're in this trade and it's going well. And then you're stressing like fuck because you're going towards the time you have to get off. So what do? Do you close it? Well, you close it, boom. Look, you would have lost that really good extra opportunity. Do you leave it open when you can't manage it? You understand? It's just unnecessary stress. And you can, this is the dangerous thing about the market. You can open a trade at any time. But you have to have the discipline to know that you probably shouldn't. Now, you get other questions about what if I have 4 hours, what if I have 6 hours, whatever that. I'll cover that off a bit when I talk about scenarios. So now we'll go into the other part where I'll talk a little bit about the realities of day trading that people certainly overlook. Realities. Lower edge. Greater competition. And fees. These are the three realities about day trading. There's more, but you know, broadly, these are the three realities about day trading that people overlook, and they're very idealist. And they think, no, that won't happen to me. It doesn't matter to me. Blah blah blah. Everyone thinks they're different. Everyone thinks they're special. Everyone thinks that somehow the rules don't apply to them. The reality is, day trading has the lowest potential available edge. Why? Because you can take more trades. When we talk about edge, I'm really talking about returns, but it also correlates over into edge. So we're talking about returns. So there's a far greater competition. There's more market makers, hedge funds, high frequency trading, prop firms, professional traders, day traders, retail traders, every type of trader, all battling in the field to extract edge on a daily basis. Why? Because if you can do something profitably for one day, you could do it the next day, the next day, the next day, the next day. And if you get it right, you can compound and grow accounts very fast. If you're a swing trader and you take one trade every 2 weeks, well, you only get one chance every 2 weeks to win a trade and grow your portfolio, right? So a swing trader can aim for much higher returns in general than a day trader. Generally, there's always exceptions. And a day trader is probably not trying to knock it out of the park with a 10-hour winner on every single trade, because you just don't get 10-hour moves intraday on any kind of regular basis. It takes a volatility event to see those kind of moves, and you do get them, and that's a style. Trading around breaking news, trading around CPI, the data releases, trading at the Fed yesterday, trading around big announcements. Those days that come along a couple times a month maybe, they can offer some greater volatility and bigger moves. But day in, day out, do not try to get 10-hour winners. Don't try and get big winners. Don't try and get 5-hour winners over and over again. The approach of a day trader is higher win rate, lower risk reward. That's generally the way you look at it. So you have a higher win rate, but you have lower RR. That might look like something like you're 60% of the time you're right, but you make 1 to 1.5, 1.5 R. So if you risk $1, you make back $1, or you make $1.50. Higher win rate, lower risk reward. trying to get 60%, trying to get a 70% win rate, trying to get a higher win rate, lower risk reward. Because what you're trying to do is just chip away, because you're taking more trades. One of the biggest mistakes I see from day traders is that they try to have a high win rate and a high risk reward intraday. Guys, like, I can't tell you, like, I'm going to show you. You have to be realistic, right? I'll go to the trade return calculator. And I'll explain to you how insane this is. Because a day trader, this does 100 hypothetical trades, right? A day trader can take 100 trades in a month easily. Okay? 3 trades a day. If you don't trade weekends, 5 trades a day. Right? Now, let's say you start with a $10,000 balance and your normal risk is 2% of that, and your risk reward is what people try to do, which is 10, and their win rate they think is going to be super high, like 60%. Right? In 100 trades, you're going to turn 10 grand into fucking $300 million. $300 million. It's not realistic. Now, believe it or not, although 10 is very high, a position trader who trades very infrequently, but when they get trades that set up, they are much bigger trades, could see something equivalent to that. But it might literally take 50 years to get those 100 trades. Right? These big, super high probability trades with big returns come along less frequently. If something is very, very, very rewarding and very likely to happen, it's going to occur far less frequently. Very important to note that. So something more typical would be like a 1.5. Okay? And there, over your 100 trade series, even that is incredible returns. And it's all about win rate for the day trading. It's all about, you have to have a higher win rate and shooting for lower risk reward. Generally. Now, there's different styles, and I'll cover those well. But that's one of the things that I want to lay out as a reality of day trading. Because most people that I see who are new have that inverted. They're trying to hit massive wins all the time. And then they're wondering why they're not winning all the time. If you're trying to hit massive wins, you're going to be wrong more often. I have systems that I trade economic data releases with. I talk about this all the time, and I talk about it in depth with my masterclass students on the day.